In this video, I'm going to talk about the 3 stocks I'm buying right now in September 2025. In fact, one of them I doubled down on, and I'm going to jump into the exact position that I took. Now, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Only results may vary. Now, let's go ahead and log into the account. As you can see, this is my account right here. If you aren't subscribed and you want to follow me along my journey to my 8-figure goal, be sure to hit that subscribe button down below this video. And if you get any value out of this video, please give it a thumbs up. I would highly appreciate that. So we just came off a 3.45% ROI month. Obviously, results vary month to month, but that was not bad. I'll take it, but I'm not the only one doing it. As you can see right here in my private mastermind, Options Trading University, we have 330 clients sharing their inspiration. As you can see here, this client, his 2nd month in the program, sharing inspiration there. Lucas right here, sharing his inspiration for August. We have another client right here. And obviously these results vary based off account size, risk tolerance. But if you do want access to my trades in the Ryan's Trade sections and the leaps, entries, and exits, that'll be at the top of the description down below. Also, I do give away free trade ideas on my Instagram and my free newsletter. You have to be subscribed to both of those. Those will also both be down below in the description. But let's go ahead and jump into it. This market is taking a nice little pullback here. QQQ, we're looking at QQQ, which tracks the NASDAQ 100. Nice little down day. We're trading here at 561. And I'm gonna kind of go over where I think this market may be headed, okay? I do not doubt that we kind of breach this 559 level potentially tomorrow or the next day, or even on Friday with the jobs report. The unemployment report comes out Friday. There could be more volatility then. And I do believe we could break this area, bounce down to the 551 area. If we do have a bad unemployment report, which I think it's actually going to come in pretty bad, we might have a short-term dip down to this 545 area on QQQ. So that wouldn't surprise me. That's why I have about 20% in cash sitting on the sidelines right now, ready to kind of enter more tomorrow and then enter more if we get down here. But overall, long-term thesis, I think we head higher towards the end of this month, okay? So yes, maybe a little pullback from here into this week. Now, if we don't get that this week, then I think we just kind of melt up higher from here. Nothing too sudden, but we melt up higher towards this 590 area, okay? Now, if we take a look at the VIX has spiked. Today, it hit a high of 1933, almost to 20, but it looks like it wants to push a little bit higher. That's why I think the market is going to pull back a little bit more, potentially tomorrow, maybe going into Friday's unemployment report. But as an options trader, this is exactly what I look at, because this is the fear and volatility index of the S&P 500, helps me allocate my cash correctly so that I have cash during crashes and VIX spikes like this, where I can just go all in. Now, let's take a look at the VIX cash allocation levels. As you can see, we are trading at the higher end of the VIX 15 to 20, so there's slight fear in the market. I could have 20 to 40% of cash on the sidelines, and I actually have 20% right now because I believe this little pullback may continue into tomorrow, okay? So just because of that, I wanna make sure I have a little bit of cash to allocate in case we get above VIX 20. Then I could be technically 100% allocated, which I'll probably allocate 10% more, maybe be 10% cash sitting there if the VIX spikes higher tomorrow. So that's kind of my current take. Again, we could just head higher, but I do think that the market wants to maybe roll over a little bit more for a nice healthy correction, a nice healthy dip buying opportunity. But with that being said, that did not stop me from putting on more positions today. So let's go ahead and jump into the very first stock. The first stock was really driven by this news too. Basically, Sam Altman, the man behind OpenAI's global expansion, wants to win over the enterprise market. So he wants to expand ChatGPT and go after the enterprise market for commercial businesses. Now, he does expand. He wants to open offices in Brazil, India, and Australia. And specifically in India, he wants to open up a huge data center. Now, what does that mean? Data centers mean that he will be filling up those data centers with chips. And who's going to be the beneficiary of that? Well, NVIDIA. Okay, so NVIDIA had a nice pullback today. These are the types of pullbacks we want to see to be able to get in for opportunity, okay? If we take a look at the MACD, kind of, bearish momentum here, kind of a nice big down day. We're almost oversold on the RSI, so that's a good time to kind of step in for me to really go say, hey, I'm going to step in and sell some cash secured puts here. So that's exactly what I did. We're going to log into the account. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But let's take a look at the account. As you can see, we're going to go down to the NVIDIA position. I actually sized up this position from 117,000, okay, last week to 153,000. And how I did that was I sold more cash secured puts at the strike price that I already had, which is 170. So currently I have 9 cash secured puts at the 170 strike to collect about $4,599. Results vary based off of, where you entered those. But basically what I did, okay, is I went September 26, 24 days out, and I went at the money, okay? So when I sold these, NVIDIA was at like 169.5. So technically they were already in the money. But the ROI right there is 4.34% in 24 days. Results aren't guaranteed. This number fluctuates based off of where the stock is trading, but I like that return, so that's why I sold those today. And I like where NVIDIA is trading. So I basically sold 2 more of those, and I'm okay getting assigned at 170, okay? 170 is basically right there, right above where the stock is currently trading. And from all-time highs, okay, if we go from all-time highs, that's about a 7.68% discount, okay? My thesis is that by end of year, okay, we're gonna, NVIDIA could potentially hit 200. So that's my thesis, all right? I think we're going to be headed to 200. So I'm fine getting assigned there, holding those shares, and then selling covered calls against my shares for income while I wait for this thing to get back up above the 185 area and then head to 200. So that's my thesis. That's why I'm actually selling at the money and in the money puts to get assigned and kind of hold for that next leg higher. Now, if I don't get assigned, that's fine. I collect the income, the premium, and I, go about my merry way. So NVIDIA is the first stock that I really doubled down on today into this weakness, all right? So that's the type of things I like to do. I like to look at, which stocks do I like most? What's the weakest today? And let's go ahead and kind of enter in there with cash secured puts. So that's the first stock. Now let's go ahead and move to the second stock. The second stock is going to be SoFi. Now what we're looking at right here is a CME FedWatch tool, which tells us the odds of a potential rate cut. So 91% odds we get a rate cut in September this month. So the odds are only increasing. Last week we were at 89%, now we're at 91%, and I believe with the unemployment report coming in bad, that's going to tell the Fed to basically, 99%, we got to cut the rates. So that's a very high odds there. That's why I'm playing SoFi into these rate cuts. As you see, rate cuts potential coming in October, in December as well, in January as well, in March of next year, all the way out to next year. So multiple rate cuts on the way. And who are the key beneficiaries of rate cuts since we are in a high interest rate environment? Well, that's, banks, because banks are able to then lend out money and help people refinance their mortgages, their home loans, their student loans, right, at lower rates. So SoFi specifically does that on student loans, home loans, auto loans, and they're going to bring in more customers by refinancing those rates and then also introducing those customers to different products they may have, like personal loans, crypto invest, that kind of stuff, all right? So SoFi looked very, very strong today, only down 2.84%. The market's down 1.4%, so not down that much. And what I did today was I sold more cash secured puts. So let's log into the account, and I'm gonna go to my positions. And as you can see, SoFi now is the largest position in my portfolio. I upped this from 128K to 171K in cash secured puts. Now, if we go to the position, you see that I have a specific strike price that I sold more of today, which is 23.5. The reason I went to that specific strike is because I like the stock at that price, and I'm fine getting assigned at that price, okay? That's where I feel, hey, I got a big discount on the stock. So what I did was I went to the end of the month, 24 days, I went to the 23.5, and I picked up about 90 cents, which is 90 bucks because you have to times that by 100. That's a 4% ROI. Results vary based off where the stock is at. So that ROI is not guaranteed until the price is executed. Now, I like 23 and a half. If we go to the overall position, as you can see, I have, how many is this? That's like 73. So I have 73 cash secured puts for the same strike, same expiration to collect about 5,700. All right, and results are going to vary based off of where I enter, okay? But that is, basically the premium I collected. So if we go to SoFi, 23 and a half is right here, okay? It bounced, it actually didn't touch it. 23 and a half is actually right here. It almost touched that today, but that's kind of a good level. There's a lot of support there, a lot of trading volume in that range. But from all-time highs, okay, I said, okay, if my thesis is that SoFi is going to 30 by end of year, am I fine getting an 11.8% discount on these shares if assigned? I probably won't get assigned, but am I okay with that? And I said yes. So that's kind of my thesis there. If I do get assigned, great. If I don't, awesome. I get to sell more cash secured puts and collect premiums. But my thesis is that we're heading up to this 30 level by the end of year on SoFi, okay? RSI is a little bearish, not quite oversold. A little potential bearish crossover on the MACD, so we could see continued downside, especially if this market rolls over tomorrow or the next day. But again, then I'll probably just maybe even add more to the portfolio, okay? Currently at 14% of the portfolio, so kind of maxed out. I don't like to go above 15%. Now, let's go ahead and talk about the third stock, okay? Now, the third stock is Robinhood, specifically because long-term, if you look at the net assets on their platform, they have increased 99% year over year, okay, to a record of $279 billion. This came out of their Q2 report. Now, this is great because the more assets they have on their platform, meaning people depositing money to invest, okay, that is more order flow revenue, more gold subscriptions that they're going to get, okay, and this is what we want to see. And I think that the trend is more people are doing self-directed 401ks, IRAs, and they are moving those assets over to Robinhood because it's a very easy platform for a beginner investor to use, okay? The easiest platform if you're like new to stocks, new to options, very, very easy and friendly, user-friendly. So if you look at Robinhood retirement accounts, that grew to a record 19 billion in Q2. So exactly what I'm saying. I think that a lot of people are actually transferring their 401ks that are potentially at Vanguard, those big companies, and they're self-directing them to Robinhood, okay? So that's what I like to see. Their gold subscriptions are growing at a crazy pace, which is also great because that's recurring revenue. And I think Hood is at a massive discount right now. So if you take a look at the stock, we're currently at the lower Bollinger Band. Yes, could we head down further? Sure, the MACD is showing, a little bit of, actually a lot of bearish momentum here, almost going towards that oversold on the RSI. But if you look at fundamentals, PE's at 50, that looks great. And I think the absolute bottom would be this 93 area. So if we flush tomorrow on the overall market, I think we get down here to 93. For me, I'm already maxed out on Hood. I'll probably enter another couple cash secured puts or even potentially a Leaps buying opportunity if we could kind of get the flush down here for a nice bounce up. Because my thesis on Robinhood is that, by end of year, maybe we land somewhere between 125 and 140, somewhere between there. Nothing too significant since it's already had quite a run up, but I think Robinhood is going to change the game as far as investing. They already have as far as making investing easy for newer people. And if they tokenize securities and do all that kind of stuff, Robinhood blockchain coming out at the end of the year, that's going to be a huge catalyst. So this was a nice big dip on Robinhood. In fact, let's take a look at that. From all-time highs, we're currently trading at almost a 15% discount. And let's go into the portfolio so I'll show you what I have. So if we go to the positions, my current Hood position is about 155K in cash secured puts. All right, I have the 105s, a lot of those, and then I have 295 puts that are currently up, and I probably won't get assigned on these. But if I had to add more, like tomorrow, if I decide to up this position to maybe 14% of the portfolio, 15%, I'll go out to the end of September and I'll probably go to the, I don't know, the 93 or 95 strike. I already have the 95, so I might go to the 95s to pick up 4.37% ROI in premium. Obviously, results not guaranteed. Those fluctuate based off of where the price is tomorrow. But I like that 95 strike. That seems like a good entry there. If I had to do the leaps, right, I'd just go for the 70 delta. The 90 strike is 70 delta right now. I'd go out 500 days, give myself ample amount of room to be right. But if we do go down to like 93, the 70 delta will probably be the 80 or the 85 strike. So somewhere in there, and I'll probably pay like $3,500 to control 100 shares versus buying 100 shares at $9,300, okay? So those will be the strikes that I'll be eyeing, like either the 80 or 85 for a nice leaps play and a bounce here on Robinhood. But overall, I think the markets are very strong. GDP came in good. The revised GDP of last week was great. Rate cuts are on the way. Unemployment might be a little worse than expected, but that will just only fuel more rate cuts because, obviously to stimulate the economy, more people are not working, right? So I'm very bullish on the markets towards the end of the year. But again, I do see potential little pullback into tomorrow, maybe into Friday. So just be prepared and know that we're kind of in this gray area on the VIX between 18 and 20, where it could either just go back down to 15 or it could spike up to 21. So I have 20% cash sitting on the sidelines waiting for the right moment. But I hope you enjoyed this video. Please give it a thumbs up and I'll see you in the next one. Take care.